Oil. Everybody's talking about it. You want to talk about oil? We saw a crash yesterday. We've seen a lot of funky things happen in the ETF space, especially with USO. But funny enough, every Wednesday for like the last 3 Wednesdays, when I do my Wealthy Wednesdays live Q&A at 8 p.m., you should probably stop by. I've been getting questions about oil and investing in the oil space. So let's talk about it. Everybody's asking about it. Let's talk about it. See you on the other side. Hey everybody, Kamari Ellis here, the Finance Rebel. Welcome to my channel. On this channel, we talk about all things wealth, all things money, stocks, investments, real estate, insurance. If it's about money and wealth building, we talk about it. All right, today we're going to talk about oil. What's going on in the market with oil? A lot of people want to know, is this a good time to buy oil or invest in oil? And we're going to talk about different ways you can invest in oil. All right, so what's going on with oil? Basically, coronavirus has kicked oil's butt. And has sent it home packing, and oil took his football home with it. So, basically, nobody's driving, nobody's flying, nobody's cruising, nobody is taking the train, right? So trains, planes, and automobiles are shut down. So since trains, planes, and automobiles are shut down, there's really no need for oil. So what we have right now, what we have going on is there's too much supply in oil and there's not enough demand for oil. This is basic economics 101. Just a quick recap. Anytime you have something that you have a whole lot of supply for, or that's an ample supply and demand is falling, price tends to fall. And to top it off, if we look about 2 weeks ago, Saudi Arabia and Russia were going at it. And they kept pumping oil. And so as a result of them pumping oil, there's no place to store oil. And right now, it's part of the reason why you're seeing the crash in WTI oil. Now, what exactly is WTI oil? It's like one of these fancy alphabets that you hear from the government all the time. But it's actually not a government acronym. WTI oil actually stands for Western Texas Intermediate. And so this is just oil benchmark. It's actually a light, sweet crude benchmark that comes out of the Midwest. It's a docking port or a depot for oil that is out of Oklahoma. And so typically you have two main, some say three, but I'd say two main oil benchmarks. You have Brent crude, which really is kind of the rougher crude, the rougher oil that needs more refinement. The light sweet is not needed as much to refine. And so you kind of have those two. But WTI kind of reflects the oil market here in the United States, because the United States is one of the top oil producers in the world now. And Brent crude kind of represents the overall global perspective on oil, the overall global price on oil. So we've been seeing WTI oil fall. But in actuality, all oil across the globe is saturated. It's totally a glut. Why? Because, like I said a minute ago, nobody is flying, nobody is driving, nobody is taking the train, nobody is getting on cruise boats. Now, does that mean everybody? No, but it's a large portion of people that are not doing these things because of the stay-at-home or stay-in-place doctrine or quarantine, whatever you may call it. So since nobody's doing any of those things, oil is not in demand. We're even seeing gasoline prices start to fall drastically. But you would think when oil is not in demand, production of oil would cut back. And actually that's not what's happening. There are oil fields still pumping oil to this day. Now it's a bit more complicated. You can't just turn off the oil wells lickety split. However, since there is a bit of a glut and there's nowhere to store oil and there's a lot of oil tankers that are full to the brim, oil prices are probably going to remain low for quite some time. And since oil prices are going to remain low for quite some time, you're going to see a lot of people hurting for it. There's a lot of countries that rely on oil. Russia, Saudi Arabia, we call those petro countries or petro states. Even Even countries like Venezuela, other South American countries that rely on oil heavily because it's one of their main exports, and that's how they fuel their economy and help their people to thrive and eat and protect them and do all these other things. So since we're seeing this kind of what they might call, the nerd guys like me will call demand destruction, because again, there's no demand and there's too much supply, we believe that's not going to change anytime soon until there is a cure for coronavirus, or at least a falling of infection rates and a falling of death rates. So I think we got a little bit of time before that happens, because nobody believes there's a cure or vaccine right now. And they feel that's at least 12 to 18 months out. Now, I know Gilead has a drug that they've been testing that shows some promise. However, there are no guarantees. Let's talk about how you can invest in oil. There's a couple of different ways you can do it. You can buy the more sexy stuff like the options or the futures. You can buy stocks. You can buy ETFs. So for this video, I'm just going to stick to stocks and ETFs, right? The options and futures are a bit more advanced / immediate, or immediate / advanced. And so I'm just going to stick with the stocks and the ETFs. All right, so you can buy stocks. You can buy the Exxons, the Chevrons, the BPs, the Schlumbergers. You can buy any one of those. But do you really understand the fundamentals of each one of these companies? Do you understand how much cash each one of them have? Do you understand how strong the balance sheets of these companies are? Basically, will they be able to survive all of this? Because we see the price of oil is down, and we see that their stock price is very correlated or moves in the same fashion that stocks do. And so if the stock moves in the same fashion, a lot of times their revenues and their profits also move. Not always, but a lot of times they do. The question is, will they have enough power, enough money power, enough cash on hand to survive this? Because actually none of us really know how long it's going to be. Or you can buy ETFs. ETFs are pretty simple, right? ETF stands for Exchange Traded Fund. ETFs are like a basket, right? So for this video, they're a basket of energy companies. Again, your Exxons, your ConocoPhillips, your Phillips 66, all of those companies that specialize in oil, whether it be refinery or midstream, it doesn't matter. They're all in there. And so you get to diversify your mix. You get to diversify which oil companies you buy. You get to diversify which companies are big, which ones are small, which ones have cash, which ones don't, which ones are better ran than the other ones. So you don't have to go through all that you would have to go through picking just one or two stocks. Now, basically, you get the whole industry. Now, we're talking about ETFs. There's several different ETFs. Now, there's three that we'll talk about for this conversation. We'll talk about XLE, VDF, and XOP. XLE is the Spiders Energy Sector ETF, all right? VDE is Vanguard's Energy ETF. So XOP is the Spiders Oil and Gas Exploration Production ETF. Now, all three of these are pretty much the biggest. They all have very similar stocks in the baskets, in the ETFs. They just have them in different weights. Like, for example, VDE and XLE are about the same. The only real difference is the fee that's charged. Vanguard has a lower fee, but I'll cover each one of those in a second. Let's talk about the biggest one, right? XLE. It is the Spiders Energy Sector ETF. It has about $6.5 billion worth of assets inside of it. It's paying roughly a 14% dividend. The expense on that fund is about 0.13%. So that's basically like 13/100. All right. However, this ETF has been beat up pretty bad, especially along these last couple of days. It's down about 50% since the beginning of the year. Okay, the next one is VDE. That's the Vanguard Energy Sector ETF. Has about 2.5, I want to say 2.4 billion dollars inside of it, assets under management. basically the same holdings that XLE holds, VDE holds. They're basically some of the two biggest energy sector ETFs in the space right now. It is paying a 7.29% dividend, so that's pretty decent. It is down year to date though, 52.43%, and the fee is 0.10% or 1/10 of 100, right? So again, pretty cheap. It's cheaper than XLE. Doesn't have the same level of assets because it's not as popular, but it's with a big firm like Vanguard. So the next one is XOP. And XOP, again, is a Spiders oil and gas exploration production ETF. Has a lot of the same ETFs as VDE and XLE, but it expands more into the drilling side, especially with gas. Has about 1.2 billion, almost 1.3 billion in assets under management. It pays a 7.94% return. It's down year to date though, 63.6%. 63.6%. So it's gotten beat up pretty bad. And the expense ratio is 0.35%. 0.35%, a little bit more than 1/4%, or 1/3%, roughly 1/3 of 1%. Now, when you look at these, you see, XOP is a little bit more expensive than VDE and XLE, but there's something else I wanted to do, right? Because these ETFs, especially these stock ETFs, they tend to do a good job of following oil and oil prices. So let's look at it real quick on this chart. So you'll see XOP at the very top, right? I'm sorry. You'll see light sweet crude right here at the top. And then the very next line down is XLE. So that's the blue line. And then the orange line. The orange line is a VDE, that's Vanguard's ETF. And then after that, the very last one is XOP. And that is the oil and gas exploration ETF. Now again, for the most part, they are very much correlated, or they move in very much the same pattern at the same time. So we call that correlation. So, if you wanted to step into any of the ETF space and invest in oil because you feel like once Corona is over, people are going to start flying again, they're going to start driving again, that should lead to a drawdown in overall oil supply, and you would think that price will start to increase. However, that's if oil countries and oil companies begin to shut down some of their fields so we can reduce some of the oil supply that's on the market right now. Now, if you don't like this ETF idea, I got an idea for you. What you can do is, if you wanted to drill down and find out what stock you like, because remember, each one of these ETFs is just a basket of stocks, you can look at their holdings and you can get some ideas from there. Again, none of the things that I talk about on this channel or on this video are investment recommendations. Everything is for entertainment and educational purposes only. Again, I'm just trying to help raise the financial IQ of everyone. But give those a try. Tell me what you think. And here's the question of the day. How long before oil rebounds? Will it be 6 months, a year, 3 months, maybe 3 years? You all tell me what it is. Drop your response in the comments below. All right, everybody. Until the next time. Thank you for watching this video. Kamari Ellis. I'm out.